Okay, everybody, it is me, Gregory Mannarino. Another day and another record high for the stock market. It's incredible. Absolutely. And we have to talk about what's driving this, at least today, and where we are going, because it's pretty obvious to me. So, yes, Thursday. It's just a lovely day. And we heard from the Fed today. Actually, a couple of Fed presidents today, but that doesn't even matter anymore. What does matter is the economic news, which continues to be abysmal. Today, as I started off my first video, we lost another 500,000 people to first-time unemployment claims. This means we're losing millions per month. Millions per month, because this is a weekly occurrence, and you're not allowed to know that. The market today is rallying or hit a new record high because it realizes that the Fed, especially after what Federal Reserve President Bostic said today, will continue to buy it all, will continue to inflate, just as I have explained to you, would continue, and we haven't seen anything yet whatsoever. Let me also explain this to you. We know the narrative from most Federal Reserve presidents, the Federal Reserve chairman, and the vice chair gave us a little, truth yesterday. The issue here with regard to inflation is about to get magnificent and monumentally, look, I can't even talk, worse. Forget about it. All right, if you think you've seen it all, or this is the end, you have no idea what you're talking about. I'm going to prove it to you. I'm going to show you in a graph that I think you're going to find pretty interesting. So let's go back to the market real quick. Then I want to talk about a few things. So yes, new record high for the Dow Jones Industrial Average. NASDAQ put on a gain. S&P put on a gain. Lovely. Just beautiful. You knew this was going to happen anyway because I keep telling you, despite the fact that Bank of America, let's see, 2 warnings in the last month, said this market's going to take a big drop. Where is it? Duh. No, it can't. We may get short corrections from time to time. But when you have a situation where we have an economy in free fall and the Federal Reserve is just taking up all the slack, debts, deficits exploding, not going to stop. In fact, it's going to get monumentally worse. And the Federal Reserve's balance sheet is going to hyper balloon. Well, the stock market's going higher. This mechanism is robbing the middle class blind, only to make the rich richer and the well-off more well-off. That's it. That's what this is doing here. It's a mechanism that is so disgustingly hideous. But again, people don't speak out against it. No, how many members of the middle class do you see in the street? I don't know, making signs and rebelling against the Federal Reserve and what they're doing to them? None. You don't see anything because you see they've been lulled into a sense of helplessness. And the fact of the matter is, if enough of them woke up, and they won't, something could be done. But when a mechanism like this is put in place and has now been in effect since the meltdown of 2008, and the middle class members are watching themselves literally die away, they just let it happen. That's typical of human behavior. They just allow it to unfold. And that's exactly what's going on here. Gold and silver today, people, did really, really well. Why? Did you see the dollar? The dollar took a nosedive. And that's also because of what we heard out of the mouth of Federal Reserve President Bostic. I keep pointing over here because I wrote it on my notepad. I want to talk about that. So after, you see, that was really interesting. When Fed President Bostic came out and made his comment, let's talk about that. Why don't we just talk about it? So Federal Reserve President Bostic, this is a quote, and this is exactly what he said, and this is why the dollar took a nosedive and why the market really decided to take off. The U.S. economy is far from conditions that would allow for tapering. Look, the market, like I always tell you, needs to be reassured over and over and over again that the Federal Reserve is going to continue to support the economy. No, doesn't give a shit about the economy. It's all about the market, okay? It's always the rich, the one percenters. They're the ones that matter here. They're hyperinflating a stock market bubble deliberately, and those people that are, again, unfortunately stuck in an account, 401k, something like that only makes money when the stock market goes up, they're going to lose in a big way. They feel great right now. I'm a paper millionaire, maybe, right? Looking at your 401k, you got nothing. You got zero because it's not realized. You understand that? Nothing. But what'll happen eventually when there is a sell-off here, and the market will, by design, crater, those people that are smart enough are going to do exactly what the investment banks are going to do, exactly what the hedge funds are going to do, and that is short the market. So all your paper riches are simply going to be transferred to someone else's reality, someone else like me, as a matter of fact. I'm telling you straight out, that's the way it's going to go. Anyway, so it's astonishing to me the power of a phrase from the Federal Reserve. Also, again, it's abysmal economic news. 500,000 people today, we found out last week, applied for first-time unemployment benefits. And this is millions per month. I mean, it's an incredible situation. And again, knowing that, the market realizes the Fed's going to continue doing what they're doing. Foot to the floor, buying it all, printing cash out of thin air, fulfilling their end game, becoming the lender and buyer of last resort. And that's it. That's very easy to understand. I think you get that. Okay, so what did we cover so far? Market's new record high. Gold and silver did very well today. Silver like 3.5%, gold like 1.4%. Dollar got hit pretty hard. Cryptocurrency is doing very, very well. Dash, my new favorite crypto, well over 400. And I really am hoping for a pullback. I didn't buy any more since I told you, but when it does drop, I will buy more of it. Do you understand? Look, you have a choice. You can either stay in the dollar. I just got an asinine remark from some imbecile who subscribes to my free newsletter, link in the description of the video. It's calling me like a crypto shill. I just say, look, if you don't like crypto, stay in the dollar. It's a dying asset. Let's see. Dollar losing value, and you want to stay in that? You think that's where you should be? No, you should be in physical gold, physical silver, cryptocurrencies as well, because you own these things. They're not owned by the issuing central bank and owed back to the issuing central bank plus interest they print out of thin air. So you people can, people like that can call me anything they want to. I just think you're an imbecile to the highest order. You want to stay in the dollar? Go ahead. You're losing, and you will continue to lose. And I'm happy to take your money, to be honest with you, when you're that big of an imbecile. All right, so crude oil today did fall under pressure, and despite that, the market put on a new record high. It's because the dollar is dying. Okay, just look at it. And you got the promise of the Fed. They're going to buy it all. Now, what I want to show you here is something I don't think you're supposed to see, but you can find this for yourself on the Federal Reserve's own website. Let's see if I can focus on this. This is a chart going back to 1960 of the money velocity, the rate at which cash moves through an economy. We are at historic low right here. If you look close enough, let's see if you can get up to that. There's a little nudge higher. Do you see that? It's almost imperceptible, but it's there. That, people, that little tiny nudge is why we're starting to see inflation. You're not supposed to know that, but that's the reason right there. I've explained to all of you since time immemorial that at one point cash is going to start to move. All the extra bills that have been created in any form are going to start chasing the same amount of goods. This is economics 101. You understand? So we got this blip. I mean, this barely perceptible in the money velocity moving higher. This is people going out and spending their stimmy checks. It's really what it is. So cash was starting to move a little bit. Now, that little tiny blip is what's causing the inflation you're seeing right now. So you could only imagine what's going to happen here at one point when this money velocity just starts to pick up a little bit, just a little bit more. So what you can expect is massive inflation to eventually hit home. And it's really not going to be from the regular guy or the regular girl spending their stimmy checks. Oh, no, 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 no. The real movement of money is going to happen when we get an implosion in the debt market. This is all being done by design, and it's all a setup. And I think you know that. I've covered this a billion times, but I'll tell you right now just real quick. So we understand right now we're getting a blip higher with regard to the money velocity. Now, for a moment, I want you to sit back and I want you to consider what will happen, and this will happen, when the Frankenstein monster debt market hyper bubble implodes. Well, when that happens, money is going to start to move, and I mean move rapidly. That's going to put a lot of pressure on the stock market because rates are going to rise in an uncontrolled fashion. What's the Fed going to do? The Fed's going to step in here and attempt to buy more, further diluting the dollar. So you got a double whammy here. You can have a massive sell-off in the debt market as that implodes. Rates will spike, putting massive amounts of pressure on the stock market. That cash isn't going to disappear into money heaven. It's going to start to move. It's going to start to move into suppressed assets. It's going to move into commodities. And then you are going to see inflation that you're not going to believe. No one's going to believe it. The potential here to see the worst hyperinflation in history is there. That's the potential here. Let's see how this whole thing plays out. But you have to understand, look, you're being lied to on a truly monumental scale. You have Fed president after Fed president, the Federal Reserve chairman himself saying, oh, this is going to be temporary. Inflation is temporary. Really? How about you explain this to us? When was the last time a Fed president showed you this? When was the last time a Fed president showed you that? Okay? And explain to you. Economics 101. Okay, very simple. Once the cash starts to move, and you're getting that blip right now, it starts to chase the same amount of goods, bam, you get inflation. I mean, you got it. All you need is literally a fraction of a functioning brain cell to understand. You got it? So for those of you who want to stay in the dollar, you will be in my prayers because you're going to need it. You're going to need to get yourself out of it. And you need to get out of it now. Henceforth, why I've told you since forever, buy suppressed assets, physical gold, physical silver, and yes, cryptocurrencies right now. Absolutely. Dash, I think, is an amazing opportunity. For those of us that got in at 280 last week when I said to buy it, we're already doing well. I mean, come on, people. I will not steer you wrong. I can't believe there are actually people out here who think that I'm shilling for something. I tell it like it is. I don't give a damn what you may think of me. That's really the truth. All right. I am out here telling you the hard truth of everything. And I don't care who likes me, who doesn't like me. I'm trying to help these people. I mean, I'm trying to help even those people out here who think that I'm some kind of a crypto shill or a gold and silver shill or a stock market shill. I'm trying to help these people. If they would have listened to me since, I don't know, years and years ago, could you imagine how well off they would be right now? But they choose the opposite side of the trade, and they are all losing, and that's fine because there's always two sides of a trade, winners and losers, and that's just the way it is. All right, people, a very important video. I covered a lot of important things here. You understand the market. You know what's going on here. You saw the money velocity. I just showed it to you. Why we're really seeing inflation. This is not temporary. It's about to get much, much worse. And when we get an implosion in the debt market, which is going to happen by design, don't think this is by accident. By design, the wave of cash that is going to leave the debt market, that is going to leave the stock market, simply looking for other avenues, again, moving, is going to be like nothing that we have ever seen in history. Mind-blowing, a mind-blowing scenario, because right now, again, think about it. We're in an engineered environment of risk. In an engineered environment of risk, that means other assets are becoming obviously suppressed in value. Risk-off assets like physical gold, silver. We all understand the price action is not real. It's being rigged anyway, but even if it were not being rigged, you would expect in this environment of a stock market that keeps going higher, you would expect certain other assets to be low. Risk on, risk off. When this flips around, and it will, you can only imagine the price of undervalued assets right now, and I'm going to include cryptocurrencies in that too. I'm telling you right here and right now, and if you know my track record, you probably have to say Greg is more than likely correct. I'm explaining to you that commodities in aggregate are going to skyrocket when we see this cash move. Even crude oil, which is massively overvalued right now, it's a real thing. You're going to see that skyrocket too as the dollar value plummets. Federal Reserve is going to try to make up the difference. Very, very, the dollar is going away in its current form. I think you all know that. And cryptocurrencies are also going to be another avenue where these mountains of cash are going to be seeking to go. So if you're patient enough and you understand why it is that you're actually holding physical gold, physical silver, cryptocurrencies, it makes it simple. Risk on right now pushes certain assets lower, and those assets are, commodities. And this is going to reverse. And then, like I said, it includes cryptocurrencies as well. And again, the only way this guy is going to become bearish on cryptocurrencies is if they regulate it. And I know there's a lot of talk about regulation. Been hearing about it for years. Nothing happens. Until that time, I will remain a raging bull. And I've nailed it to the wall. How many of you wish you got in on Bitcoin when it's at the buy at around $3,000? How about you dollar shills out here? Would you rather stay in the dollar? Duh. I'm laughing at you. I'm literally laughing at you. All right. This guy here loves you a lot. Please share the video. Very important. And I am so out of here.